What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, we welcome you to subscribe. Otherwise, you can support our channel if you just like, share, or even comment down below. It helps our content get out to a wider audience, and we definitely appreciate the support. So for today's video, we have another financial institution review. But before I get into that, I just wanted to make some clarifications. We do not endorse or promote any products that we talk about. When we do reviews, it's from personal experience and just to relay information. So, we're not telling you to go out and apply for things. I get some comments that, I shouldn't be giving information to people with bad credit, etc. Right now, one thing about that is, just because you have bad credit does not mean you can't embrace information, right? Don't ever let anyone sort of define you based on, past circumstances. I at one point didn't have the best credit, but I do these videos really to motivate people and provide information from someone who's worked in the finance field for over 12 years, right? Working for different banks, community development, financial institutions, SBA lenders, and things like that. Really what my purpose is with this channel is to spread this information on finance and credit that they don't teach you in any type of high school or even college for that matter. I went through undergrad and grad school at one of the top public universities, and not once during the entire, 5 years that I attended did I ever even know what a FICO score was until after, getting out in the real world and, figuring out this information on my own. So when I'm sharing some of these data points and perspectives from, being in the field, right? Working in different financial institutions, even to this day, working in financial institutions. Um, the reason why I share this information with you guys is so that everyone has an opportunity to level up when it comes to credit, right? Because that could be a really big factor when it comes to just having a much better quality of life, building wealth, and just leveling up. Period, right? So we don't advocate for people being irresponsible. Not once in this channel are we advocating people to go out and live beyond their means and get credit, run it up and run off. Like, that's not what we're promoting at all. If anything, it's encouraging people to leverage credit in order to acquire assets and generate income from that. That's really what we preach. So and either way, we cover stuff from both ends of the spectrum. So it doesn't matter what your current situation is. That doesn't have to define you forever. So just because you made some mistakes in the past doesn't mean that you're unworthy of trying to do better for yourself, because that's really what we're trying to do for all of our subscribers, is to help you level up. And when I show off, just to kind of motivate people, like I used to be, used to not have the best credit, but I do this to really motivate you, to show you guys what's possible. And so with that being said, I'm gonna get into the video today. So for today's video, we're going over another financial institution, but rather a financial product that's related to this whole COVID relief. So this is particularly involving Maryland-based businesses. However, I know there might be some people who might say, hey, I live in California, why are you going over this? There are ways around sort of eligibility, right? Sometimes you have to be creative. Don't always just take no for the first answer. I never, take the first answer at face value. I need to, rule out all possibilities before I close the door on something. So with this particular program, you can get in as a foreign entity. So foreign entity registration is when you basically, let's say you have a business in Florida, you want to establish a presence in a different state, you just go through that state's Secretary of State website and you do a foreign entity filing or registration, the same thing, and that establishes your foreign entity in that particular state, so that you can enter into contracts in that state, you can open up bank accounts, acquire business lending and things like that. Small fee, you basically have to have a resident agent. You have to have a business location, so you can have a virtual business location, and you just have to pay the filing fee. And then one thing to keep in mind, you will have to pay the annual report filing fee every year. So that's just one thing to keep in mind. But it's a small investment just to open you up to as much funding and opportunities as possible. So this particular program is through the Maryland Small Business Financing Authority. So that's the MSDBFA, Maryland Small Business Financing Authority. And so this COVID relief program is for businesses that have been affected by the current pandemic situation of COVID-19. So essentially, what they're offering are loans up to $200,000. And the way it works, so for loans less than 50,000, there's no personal guarantee. For loans over 50,000 but less than 100,000, there is a personal guarantee. And for loans that are over 100,000 and up, then it's a personal guarantee, and they're going to put a lien on any business assets that you might have in the future or currently. So kind of similar to what the SBA, like EIDL, has done, where it's under 25,000 is just no PG. Over 25,000 is a lien on your business assets, and then over, I believe it's 250 or 150. I think it's a lien on your business assets as well as a personal guarantee. So it works a little bit different, right? With this program, they're personally guaranteeing it over 50,000. And over 100,000, you're personally guaranteeing it, and it's a lien on the business assets. So that's just one little difference. Now, the way it works is you get the loan rate is 0% for the first 12 months, and the remainder of the term is 2%. Now, these loans aren't as long as the SBA loans, so they're only going out 60 months, so it's a much shorter time horizon. So just keep that in mind. Like, the payments would be a lot larger, with a much shorter term, depending on the amount that you take out. But in comparing it to like an SBA loan where it's 30 years that you're paying off, the payment's going to be a lot smaller. So just keep that in mind. So the purpose of the loans can be for payroll, rent expenses, equipment, facility expansion, and basically any type of working capital needs for your business. The way it's a little bit different is that your business has to have been established from at least before 1/1/19. So it's a little bit different from the SBA, whereas SBA, I believe it's January 31st your business had to have been established. Here they're even pulling it out a year prior to that. So actually 13 months prior to the SBA. So January 1st, 2019, your business would have had to be established before that date in order to qualify for this particular loan. And so one of the great things about this particular loan is that the minimum credit score is 550. So that's the minimum credit score that you would need in order to qualify that. And they don't specify which credit score, but I would just say, you're probably going to need to be at least a 550 across the board. And again, the minimum amount is 25,000. The largest amount is 200,000. And then I guess beside that, you do have to have a principal place of business in Maryland. So you're going to have that. You're also going to have to be in good standing with the Secretary of State. So, making sure that so usually you'd have to order like a certificate of good standing, which will basically is just the official document from the Secretary of State that tells them that your business is in good standing, and they need that official form. You can't just go and print it off the Secretary of State website. You actually have to order it from the Secretary of State. So that's just one difference. In addition to that, you're also going to have to provide 2 years of historical financial statements. So that could be balance sheets and income statements, or your federal tax returns for 2018 and 2019. And then also, since it's August, you're going to also have to provide an interim financial statement that's not older than 531 2020. And you're also going to have to show evidence that reflects your inability to pay rent, loan payments, suppliers, employees due to reduced revenue as a result of suspended operations. So, how that's defined, I'm not 100% sure. You're also going to have to just show evidence of your business disruption due to COVID-19. And then, in addition to that, you're also going to have to provide a brief summary statement about the impact of COVID-19 on your business and financial projections for the next 6 months. So, this is, I mean, it might sound like a lot, but it's really not that much, if you're preparing these financial statements and things like that, or, you could pull a lot of that right out of QuickBooks and just organize it a lot easier. But as a business owner, those are the types of things that you should be tracking anyway. So, not that much of a lift. Now, here are some things you want to keep in mind too. There are a couple industries that are ineligible to actually, I guess, apply for any loans through this program. So those are nonprofits, financial insurance companies, real estate development companies, real estate investment companies, massage parlors, as well as cannabis related businesses. Now, the application process is open, until there's no more available funds. There's no application fees or commitment fees or anything like that. It's just on a first come, first served basis. Now, the company that is administering this, COVID relief business loan program is Meridian Management Group. So Meridian Management Group is just a fund manager, right? They manage different funds for different public entities or private groups, and they're just they're basically doing all the underwriting and all the loan servicing and things like that on behalf of different entities. So, for example, there might be like sometimes, for example, like pension funds will or pensions rather would give money to different fund managers, to take that money and invest it and things like that. Kind of the same deal, right? They manage several public funds and disperse that, loan the money out, collect the payments and things like that. So aside from that, they also offer some other non-related products versus this COVID-19 loan program. So they do offer lines of credit up to $2 million, as well as they do equity investments. So if you're actually looking to raise capital and you want to sell a portion of the company, they can help you with that process, right? Um, and then they also offer, which is interesting, surety bonds. Now, and this is another example of something you probably don't learn in school, right? So surety bonds are very, very important because they facilitate the way that a lot of deals are structured and facilitated, right? So a surety bond basically is like, I guess one way to look at it is like a wholesale insurance policy. So a surety bond is basically a organization or a person that assumes responsibility of a debt in case of a policy default, right? So a surety and like a guarantor is basically the same thing. They're basically like, I guess one way to look at it is like a cosigner, right? So sometimes companies need to have be bonded in order to facilitate, like let's say like a construction project or a government contract, or something like that. Having a surety bond is going to reduce the risk, because you have this entity that's guaranteeing, in case of non-performance or in case of non-payment or whatever the stipulation of the contract might be. And a surety bond is just kind of like insurance, one way to look at it. But it's at a much bigger scale than, I guess, like a typical insurance policy. And so that's another service that Meridian Management Group offers. So definitely check them out. I'm gonna post a link in the description of the video. Now, again, just to recap, up to $200,000 for terms as long as 5 years, 0% interest for the first 12 months, 2% interest for the remainder of the loan. There's no personal guarantee under 50,000, over 50,000, less than 100,000, a personal guarantee, over 100,000, personal guarantee, and there probably some like UCC one filing or lien on your business assets. So yeah, overall, this is a great program. So you could definitely check it out or inquire. I'll post the information in the description of the video. And if there's anyone who has any experience with Meridian Management Group, definitely let us know in the comment section down below. And until next time, y'all take it easy, and we'll talk to you soon. Peace.